It's the last edition of Business Morning for the week. Good morning and welcome. I'm Chimeze Obi Iwago. As things seem calm after the NSAS protests, residents and business owners are licking their wounds over losses suffered during the post-NSAS protest activities in Lagos. Some of the victims told Channels Television that it will take more than mere words of assurances from government to leap again.
Life seemed to have returned to Lagos metropolis, with people carrying on in what can be described as business as usual. Marked under this sense of commercial and human activity are those whose businesses and means of livelihood has been brought to ground zero, those who took a hit from the rampaging arsonists, what many have described as a fallout of the Lekki Toll Plaza incident, which is an unfortunate twist to the NSAS protesters. This wine shop, usually stocked with various brands according to the owner, has been stripped to bare bones, leaving the proprietress despondent.
All these shelves are filled with expensive drinks. They emptied it. They took everything. They even took AC. They removed the AC, both the indoor and the outdoor vents. They carried chillers. There are 4 chillers in this shop. They carried all the chillers with all. They did not even leave a bottle of drink. All these shelves are always filled with drinks. Food drinks in cartons are here. All these are shelves.
Most shops on this high street in Surulere had a taste of the bitter pill of losses and destruction. More devastating is the damage to the popular shopping mall on Adeniran Ogunsoya. Eyewitness says the vandalism started by 7 p.m. and went on till early hours of the next day. A total of 150 shops suffered losses of various degree. Where necessary, they shot out the thick glass protection to gain access. They didn't even spare this pharmacy store. They even had some ice cream elsewhere and some food. How more devastating can it be for anyone? Just after 20 days in the business, here at this mall, an investment in excess of 30 million naira, this man tells the story of how everything has gone to ruin.
We are looking at, for the gadgets alone, we're looking at about 7.4 million worth of gadgets, minus the screens and some other peripherals, which amounting to about 10 to 11.1 thereabouts, just for the accessories and gadgets and the whole gaming machines. For the rent, we paid about 6 to 7 million per annum. So that was minus that, So they took everything.
Still, the question begging seriously for answers is, what is the connection between the protests and the wanton destruction and looting of critical public and private property?
As at 4 a.m., they were still in the mall stealing, looting, uninterrupted.
We've lost over 30 million naira in this looting. The first one that happened was during the xenophobic attack, and we lost close to 20 million naira then. And this time around, after we lost that money, we approached the government. They asked us to bring a letter. We did everything they asked us to do. Unfortunately, we didn't get anything. We had to go back to bank, and we borrowed money from bank. We restocked, and we started again. And this one happened.
Members of the Fourth Estate of the Realm, whose constitutionally provided jobs meant they kept everyone abreast with developments of the NSAS and more, took a fall. Broadcast equipment worth millions of dollars touched. The enumeration of destructions across the state is still ongoing. Governor Sanwo-Olu perhaps has one of the most difficult jobs presently.
500 staff that we have, some buildings did survive.
As many business owners and beneficiaries of public utilities are quite expectant of how any form of compensation will pan out. Hopefully, it will be a fruitful wait. Olu Phillips, Channels Television News.
Still healing from the aggressive impact of coronavirus pandemic on businesses, analysts say the manufacturing sector is one sector that will be hard hit by the NSAS protest and the resultant social unrest. Already, data from the Central Bank of Nigeria shows manufacturing PMI has fallen for the 6th consecutive month after contracting to 49.4 in October. Joining me now is the Acting Director General of the Manufacturers Association of Nigeria, Mr. Ambrose Oruche. Thank you very much, Mr. Oruche, for joining us on the program.
Thank you for having us once more.
Well, watching that video there now and looking at the amount of destruction there is really disheartening. But for manufacturers, to what extent were they affected?
Well, we are still comparing the effect of attacks on our members, but I know that Idu Industrial Estate in Abuja had it rough with the protestants. They vandalized a lot of machines, equipment, scattered away a lot of stocks at their warehouses. Imagine doors, frames, and windows being scattered away. For what? They are not palliatives. We were affected, many of our members. I was also told a company in Jos that they were about to attack, and the company came in and defended themselves, protested. The same thing happens in Ilori, and all over the country. We are still putting together our statistics on how our members were affected. Okay,
to get perhaps to quantify the amount, basically, that may have been. We heard a lot of those business owners talking about millions that they would have probably, lost. Now, do you think perhaps this kind of situation could have been avoided?
Well, it could have been avoided if there is a security on ground to monitor the affairs of other part of the NSAS. I believe there are two sets of that protesters. One requesting for reforms on Nigerian police, and the other 5-point agenda, while others are also, criticizing the NSAS protesters and attacking them. And if that would have been nipped at the bud, it would not escalate to this level.
Yeah. Now, what do you think can be done to mitigate the losses suffered by your members and, of course, other businesses? I mean, even though the Lagos state government has made some promises, but for you as an association, do you think there's any way the government can also support?
Let me start by commending the banks, the financial institutions that come up with policies to encourage those that have lost their properties to come and then assess interest-free loans. I will also appeal to other bankers to see how they can also support that with funds. But what most of our people affected needs now is grants and not loans. But loans will help them to build up their lives. So if government can provide a trust funds for those affected to take advantage of the funds and then restart their lives to be of good.
No, but for some of them that are already, gotten some loan from government, and perhaps the issue now would be how to pay back.
That's where government should come in to give them a waiver of that facility they have collected that we are vandalized. Loan forgiveness happens here and there. And I appeal to if government will look at it and see how the commercial banks that giving them that loan can be repaid, through a funds or whatever.
Right. Now, aside from this social unrest, the manufacturing sector, of course, is already pressured by the COVID-19 pandemic. What has business been like for your members, since Nigeria opened up its economy after the COVID-19 lockdown? Okay,
well, let me start by the PMI result that came out. I'm not here to critique CBN's PMI report, but when you look at it, that the PMI contracted to 49.4, I believe it would have been lower than that because business have not really picked up. In the month of September that we are talking about, you could recall that's where the electricity tariff was hiked. In that month, PMS price was hiked. In that month, government, central bank came up with a policy on Form M. In that month, IDEC, customs came with a policy of IDEC. The same month, all this targeted on businesses, and I'm surprised that it didn't get down to 42.6 in the contraction because the businesses, suffered a lot in the hands of government policies at that period. And if you look at that PMI report, you will see that they said that the raw material level contracted, to 46 points, while production level increased to 50.0. I wonder if the raw materials level contracted, how will the production level increase? I was asking myself while I'm on my way coming, how would that be possible? When there is no forex to import raw materials, because the CBN put a policy on from opening. When there is no access to funds, you recall that CBN came up with intervention funds of 1 trillion naira to manufacturers. But how many of the manufacturers are accessing these loans? Commercial banks came up with hurdles, to discourage manufacturers accessing this low interest rate loan from central bank, because they are now putting conditions that if you have to access this, you must get some quantum of loan from us at a ridiculous price or interest rate.
Yeah. So well, you talked about the 1 trillion naira support grant. Yes, because a lot of questions that would come to mind is, considering all these various efforts to really support the growth of the sector still accounts for less than 10% of the country's GDP. And then the question would be, is it a failure of strategy or a failure of policy?
Yes, I think it's a failure, not a failure of policy, not a failure of strategy, but a failure of some aspect of the people that will implement that policy. Yes, the policy is good. We commend government for that, thinking through, we really commend government. But leaving it in the hands of the commercial banks to implement creates a challenge, because the commercial banks are also there for business. And they are telling them that out of the interest that will go on that loan, they are not taking anything. I mean, put yourself in their shoes. They will try to become a cog in the wheel of that program. Even if the policies and the strategy to implement them are fantastic, but coming to reality, on ground, you discover that it is not taking off ground. It's a good initiative by CBN, and they could have provided a succor for commercial banks to enable them participate willingly in this process.
Now, if you say that a lot of your members have really not gained access to that money, the 1 trillion. You as an association, what kind of talk or meetings have you been having with the central bank? I want to believe that, you've been talking to them, they have been talking to you.
That's true. We are, I think about 2 weeks ago or 3 weeks thereabout, we met with CBN governor on this issue. We have even written to CBN governor on the challenges we are facing with commercial banks in that aspect. We are yet to get a response from him or from them on what the plan is, to find a way around it so that many members that are interested in having these loans to grow their industry, their businesses, have access to it.
Now, with the situation on ground now, with what we have seen, and of course, we've seen that the PMI contracted, even though you say what you're seeing should actually be worse than, what we have there on the data. Now, what are the 3 most urgent things you think the current administration, the central bank, the monetary authority, the fiscal authority should do to salvage this sector?
Well, if I have to rank it, first I will start with the alignment of monetary policy with fiscal policy. There is a disconnect between the monetary policy and fiscal policy. Minister of Finance is saying one thing, Governor of CBN is saying doing the other way. And then the second thing also is the forex issue. Forex issue. Government, the central bank has to relax this from clause that they are not willing, they will no longer accept from open to a third party, because that is affecting small and medium-scale enterprises. And if care is not taken, many of them will close shop by the end of this month. Because the feeling I'm getting from our members is that the stock of raw materials are running out, and they cannot replenish because they don't have forex to do so. Even those that have already imported these things cannot get forex to repatriate, to their to companies that gave them the raw materials in the first instance. So I'll talk about the two. This third one is the energy issue. The price of electricity is so expensive now for an average manufacturer to survive. I thought that government could have come in and give an exception to manufacturers when there was a hike in electricity tariff, but that has not been done. Many of our members are complaining from, if you used to pay 2 million, you are now being given 8 million. How would you put that in your product and still sell, knowing that consumers have a party because the spending skills, the spending is not there. The purchasing power is getting lower on daily basis due to inflation. So when you put that together, you see that it's a hard time for manufacturers, really.
Now, talking about electricity, I know that Manufacturers Association sometimes proposed at some point, to embark on the construction of a power plant for its members. How far has this gone? Some would say that this project is ambitious.
Well, we had some challenges along the line because of government policies on getting licensing, and also trying to discuss. We're also not willing to let go, knowing that manufacturers are their main consumers, their major consumers, But the project will soon take off the ground. I think we are working on providing power to Acme Industrial Estate. The plant is there. The gas has been connected. All the necessary have been done. What is required now is commissioning. I think when we commission that aspect, that will show that we are really serious in providing power to our members.
Now, some analysts have accused the manufacturers of being too dependent of imported raw materials, and this is why they are not competitive. And you are talking about the challenges in the foreign exchange market, and the central bank is looking at ways, manufacturers, the country as a whole can actually look inwards.
Thank you for that question. That's an interesting argument or angle we'll have to look at. Now, when you want to produce raw materials, first you look at the commercial viability of that raw materials. How many of the people that are buying it? For instance, let me use active pharmaceutical ingredient, for instance, and you produce it in Nigeria. Will Europe buys it from you? Will Asia buys it from you, Americans? So if you are producing for Nigeria particularly, you have no market. And that does not make it commercially viable. Even though you may have the raw materials, but it's not commercially viable to produce it. That's the challenge we have. And you also understand that most of these companies are multinationals that tries to take advantage of economic of scales to buy raw materials from a lower source than trying to develop it themselves. There is, yes, I agree with central bank on being patriotic, trying to develop this, but that is basically government initiatives. If government can provide incentives for these manufacturers, for someone to invest in raw material development, that person will take that advantage of it, of the incentives, and build the raw materials. The central bank is coming with all kinds of policies, tomato policy, dairy policy, and all that. But we are not yet there. We can't stop importation of milk now because we have cows. How far can our cows go in producing milk for us? What is per cow yield? That's what we are going to look at. The countries that are self-sufficient in milk, how many years did it take them to get there? The countries that are self-sufficient in fruit juice, how many years did it take them to get there? And that's what we are going to look at. What was government incentives to those sectors for them to produce that product for the manufacturing to take advantage of?
Well, I guess what the manufacturers probably would have to do is to continue to engage the government, engage the fiscal authority, engage the monetary authority. And let's just hope that with the Africa Continental Free Trade Agreement coming up in January, yes, we will be ready to actually be competitive and fit into that AFTA agreement. Thank you very much, Mr. Uruche, for your time on the program.
Thank you for having us.
Ambrose Uruche is the Acting Director General of the Manufacturers Association of Nigeria. When we come back after the break, we look at Nigeria's investment climate as the commemoration of the World Investment Week comes to an end. Just stay with us. All right, just before we talk about the investment climate, let's look at the global oil market as prices edged up today, but are on track for a second monthly fall on growing concerns that the rise in COVID-19 cases in Europe and the United States could hurt fuel consumption. Brent crude edged up 15 cents to $37.80 a barrel after touching a 5-month low in the previous session, while U.S. West Texas Intermediate crude was at $36.27 a barrel, up 10 cents. The Organization of the Petroleum Exporting Countries and their allies, including Russia, a group known as OPEC Plus, are expected to raise their output by 2 million barrels per day in January as part of their production agreement. However, top producers Saudi Arabia and Russia are in favor of maintaining the group's output reduction of about 7.7 million barrels per day currently into next year, as renewed lockdowns in Europe are threatening to cool demand again. Okay, the Securities and Exchange Commission this week joined the rest of the world to commemorate the 4th annual World Investor Week under the support of the International Organization of Securities Commissions. The objective is pointed at raising awareness about the importance of investor education and protection towards engendering the financial and overall well-being of the individual, and particularly in view of the effects of the COVID-19 pandemic. Joining me now to look at the importance of investor education and protection and other developments in the Nigerian investment space is a senior economist and head of research and strategy at Greenwich Merchant Bank, Ayodeji Ebo. Thank you very much, Mr. Ebo, for joining us on the program.
Thank you for having me.
Now, the World Investor Week ends today. What's the significance of this event, and how can this shape investors' perception about the Nigerian capital market?
Okay, thanks. And looking at the focus of the Securities and Exchange Commission as or the topic they've even chosen, which is more of mobilizing savings and investment. We all know that when we look at the savings rates as a ratio of GDP for Nigeria is still very low. It's below around 20%. And also looking at it based on household savings relative to income, still very low. Yes, we know it's really a very challenging problem, but we all know the concept of finance. If you are unable to save 10% of your income, even when you are earning 10,000 naira, you will also find it difficult to save that 10% when you are earning 1 million naira. So more of financial literacy, more of creating awareness, also enlightening investors on investment options, safe investment options, which also ties into their investment objective, also trying to understand their risk appetite, as well as the investment horizon. So it's really a welcome development that at least a week or a month is dedicated to focusing on investor education, investor enlightenment. And we believe that that would attract, create more awareness across the different segments of the population.
Now, due to low interest rates in the fixed income market, investors are in search for higher yielding investment. What should investors watch out for before making any investment decision?
Yes, thank you. This is a very interesting question. If we look at the last PMA, primary market auction for T-bills, for 364 days, rates dipped as far as 0.98% for a year. And when you're also considering that vis-a-vis the high inflation rate, it means that investors we need to seek for investment that can help bridge that inflation gap. So what investors should watch out for is, one, should confirm whether the investment is regulated. That is really very critical for investors to also looking at it in terms of the interest rates that you are being offered. You need to confirm and understand the business these companies are going into, even put in your fund. Also, looking at, even for those that have, you need to understand what are their their past performances. So that will give you an idea of how that fund will also perform in the future. So it's more of understanding the business you are trying to put in your money. If anyone is promising you a certain interest rate and you can't also identify what that will be put into, then I think you should run away or
Now,
avoid it.
yeah, there are several investments offering ridiculous rates in the country. What's your advice to existing and potential investors?
Yes, thanks. We know what we call Ponzi schemes, and the structure that most of these people adopt is that they try to entice investors with high interest rates, and based on that, they pay out. They use the investment that is or inflow that they get to pay out any new client or those maturing clients, and that's you would see that when you look at the interest rate, it's really unimaginable. You can see there's no form of investment that can give you that high interest rate. So for you not to lose your funds, then you need to be satisfied, or you look at regulated investment. Yes, interest rate may be very low, but it is better to protect your little savings than taking very high risk. We're all aware of the era of the MMM, and overnight a lot of Nigerians lost billions of naira, because when we are talking about even savings, so when you look at the capital market, we don't see, we are currently not seeing a lot of interest as we see when all these other products open up. And so there's investors should watch out for investment that are giving ridiculous rates. Once those rates are not obtainable in the market, you also try to call your investment advisors to give you more, to enlighten you on any products that is being pushed to you. I think doing that would help you limit the risk of losing your funds and putting it in on regulated funds. We also know we have the crowdfunding. There are a lot of agri investments there, but I know the SEC is working on a rule. I think the draft has been working on a rule to see how that segment can be regulated, so that we don't wake up overnight and we discover that a lot of investors are losing their funds, because a lot of while you have the genuine ones, you have a lot of a lot of people taking advantage of that platform because of the interest they've seen that investors have generated over time.
The Securities and Exchange Commission can increase youth participation in the capital market?
Yes, I think the first thing we need to look at is we need to first include investment securities, not about investment securities, into curriculum across, even from primary to secondary school, then to university. That's where most youths would have built that culture of investment. They will have more understanding of the types of investment that are available. Okay? It will be easier for them to cultivate that culture if they start working. So bringing the youth, we need to understand what entices them. Currently, there are a lot of FX platforms, and for a lot of the youth may not understand how it works, and they lose a lot of money. But the way those platforms have been designed looks very attractive, looks very interactive. These are some of those positive that we can also, for the capital market operators, they can emulate and build a platform, whether it's for stocks, whether it's for fixed income transaction, that looks very interactive, as is artificial intelligence. And as a result, you could see youth also migrating to these platforms, and they will also want to gain a lot of understanding about the platform and investments.
Now, we still observe the issue of unclaimed dividend is still high, despite the SEC awareness in this space. What steps do you think capital market operators can take to reduce the accumulation of unclaimed dividend?
Okay, thank you. I think the first step is we need to first identify what is responsible for the accumulation of this interim dividend. And one major factor, based on my own experience in the market is that the process of claiming the dividend is still very manual. I know a lot is being done to see how they want to automate that. So beyond even the past dividend, this current process will continue to accumulate a lot of unclaimed dividend. Currently, when you open your account, the details that I feel regulators and the CSAS requires are already collected at the point of opening your account. So if you are buying shares in the secondary market, I don't expect you to begin to give dividend form again. If and all those things leads to accumulation of accumulation of dividend rather. So we need to process. We need to come up with a structure that once you are buying, especially in the secondary market, capture your details from the point of opening your account. And as a result, your dividends should be automated because your BVN is being collected at that point. Your bank account details are also being collected at that time. So I think with that, there should be no process required to claim your dividend. And if we're able to adopt that, it will resolve accumulated dividend going forward, while we also look at how we want to automate the process of the accumulated ones.
Now, the NSCA and FMDQ have also been in the forefront of investor education. How far has this initiative improved investors' participation in the equities market?
Okay, thanks. For the NSC, we've seen that aggressiveness, that initiative of taking that financial literacy to the youth. We've partnered with them going to the NYSA camp. We've seen how a lot of interest have been generated. Also, the FMD also have an annual program that they run to on financial literacy. And I believe that if that is also sustained, as we progress, those participants will be like an ambassador for the capital market. And as we progress, we'll be able to have more participation and also more understanding of the products that they can invest into. Yes, we look at the fixed income market is still valid for most HNIs or for institutional investors. But with fund managers coming up with mutual funds and coming up with platforms that can easily enable investors to subscribe and monitor their investment, then we believe that would also increase the interest and the attraction that we would see from potential investors.
All right, thank you very much, Mr. Ayodeji Abel, for your time on the program.
Thank you for having me.
Ayodeji Abel is the Senior Economist and Head Research and Strategy, Greenwich Merchant Bank. All right, just before we go to the equities market, let's take a moment now to go over to the Lagos Arbitration Center in Lekki, venue of the sit-in for the Lagos State Panel of Inquiry and Restitution for Victims, the now disbanded Special Anti-Robbery Squad. Our correspondent, Victoria Ido, is standing by to bring us up to date with the day's proceedings.
Thank you, Chimeze. Like we know, it's day 2 of the judicial panel set up by the Lagos State government to look into abuse-related issues. Now, so far, the panel has received over 15 petitions, and today we're in the hall. Well, it's a small hall. There are a number of people here, people from civil society groups. There are also people from the Human Rights Commission, journalists. We have our live equipment here. About 3 or 4 cameras are situated at different locations. The panel is yet to sit. We're supposed to sit at 10 a.m., but the reason given for the fact that they have yet to sit is because the panel is still going through some of the petitions so that they would know which of the petitions they would pick today. On our last sitting, which was the first day, we had 4 petitions that were read out that day. So we're not sure how many petitions will be aired today. So far, we're still waiting, and everybody is geared up, for how far we're going to go today. Thank you, Chimeze.
See how that goes. Let's continue to keep a track, and I'm sure you'll continue to update us on the developments there. Okay, Trading has resumed after the public holiday. Let's get a sense of how the market has started the day. Eddie Diong Ewa will be talking to a stockbroker. Eddie.
Good morning, Jimmy. Thank you. Well, we're hoping that investors are, continuing with those positive sentiments we saw in the markets. But just before we talk to Tajuddin Olayinka, let's just quickly review what happened on Wednesday. The markets jumped 1.58% to 29,437.60 points, while the equity cap was at 15.386 trillion naira. Now, activity was mostly positive, although volume declined by about 2% to 375.24 million units, worth 4.63 billion naira, and all of that changed hands in 5,947 deals. Now, Zenith Bank was the most traded stock by volume, while Boa Cement was the most traded by value. Now, each of those two stocks accounted for more than 2 billion naira of the total value. But let's talk to Tajuddin Olayinka, stockbroker at Valmont Securities. Good morning, Mr. Olayinka. Thank you for joining us on the program.
Good morning, everyone.
Well, we saw the market close positive on Wednesday. So what sentiment are investors resuming trading today?
I think they are sustaining the current trend. The bullish sentiment will still be there, even though we'll see, we'll see a semblance of profit taking and bargaining onto, happening side by side. But clearly, we hope to see, a more bullish market because of the improved earnings profile of, some of these companies.
So how long do you... Okay. Sorry, go ahead. Go ahead. No, continue what you're saying.
Okay, we have seen significant leap in turnover of set of these companies. Very significant that, it points in direction of, ability of these companies to actually, face the reality of inflation. So when you see that and you see just like improvement in profitability, but significant leap in turnover, it's obvious that these companies are able to somehow beat inflation and, of course, can still sustain their market share in spite of inflation. So that is actually driving the sentiment.
Okay, but how long do you think? Also, are we expecting this bullish sentiment we've seen to continue during the earnings season, or how long will this run last?
The way market behaves. Once you move up a bit, you will see the speculators who want to apply their trade, take their profit as usual. But you also see those who want to be in the market for a long time. Maybe those coming back from the fixed income market who have been chased away because of the low yield in that market. So you see them coming to the market to also fill that gap. So we'll see joint movement. We will see movement from those who want to do aggressive buying. We also see movement from those who want to do profit taking. So bargain hunting and profit taking will operate side by side, and so we'll see an improved market.
Now, speaking about earnings now, Stanbic IBTC is the first lender to release its earnings. So with what they've posted, what are your expectations from the earnings of other lenders?
I think, most lenders will still sustain what we saw in the second quarter. Second quarter was the most challenging, period for them. But since they were able to overcome that, I believe they will be able to improve from there. In fact, what we have seen from non-banking sectors will also extend to the banking sectors in terms of, improve, gross earnings.
Okay, so what's your outlook for next week?
We'll still see a semblance of a balanced market. Either way, it will not be too aggressive. We won't see whether aggressive buying aggressive, but we'll see a balanced market. Many investors are not coming back to the market, especially those of them who are not comfortable with the low yield environment in the fixed income market. So we'll see, we'll see more or less a balanced market next week.
All right, Mr. Olayinka, thank you for your input on the program. Tajuddin Olayinka is a stockbroker at Valmont Securities. Now, just before we go on that quick break, the sectoral performance was broadly positive on Wednesday, with the banking index or the consumer goods index taking the lead. Well, we'll have to stop there for now. Over to you, Chimi.
Well, we hope for a profitable day. Today is the last trading day for the week, of course. Anyway, we'll take a break, and when we come back, we go to London, and then back to you, Eddie. All right, let's get a sense of some of the developments in the UK with my colleague there in London, Juliana. Good morning, Juliana. Well, the government will close the furlough scheme this weekend, but ONS data shows almost 1 in 13 UK workers, that's about 2 million people, are still on furlough. We know the Chancellor Rishi Sunak had announced some new support measures. How sufficient are the new measures to support these number of people?
Well, unfortunately, Chimase, it's probably not going to be sufficient enough. And I think the Conservative government, to give credit to them, have been quite open about that not every job is going to be saved. Not every job is going to be viable enough. It may be honest, but of course, that's not a softening blow to the 2 million people who are still on furlough, who may potentially be losing their jobs this weekend. I think the furlough scheme has cost the British government, or most importantly, the British taxpayer, about £58 billion. In its peak, there were about 9 million people receiving up to 80% of their wages. It has gradually declined, and it will come to an end tomorrow. It's quite a significant moment because this is the first phase of government support, and it is going to be replaced. It's going to be replaced by the job support scheme, a kind of more cheap and cheerful job retention scheme. So the government will be paying a third of employees' wages, but only if they work a certain amount of hours. And I think now the issue is the difficulty of understanding exactly how these government support schemes work. But again, like I said, the government did say that it won't be able to save every job. And unfortunately, time will only tell whether or not the 7.8% to the 10% suggestion as to how much unemployment will rise in the UK, only time will tell. It currently stands at 4.5%, the unemployment figure.
Yeah, and how is the UK authorities taking the IMF's advice that Britain should increase spending to tackle the second wave of COVID-19 pandemic without worrying about its growing debt levels?
Well, I think the IMF have always been pretty clear about this. I believe they made this statement about a month ago, and they've reiterated it yesterday, that they want governments in the West to stop thinking about raising taxes and stopping government support, that this is the time when they need to top up their economies and allow more fiscal spending. And that's really what they reiterated. I think from what the IMF said yesterday, what's really taken economists by surprise here in Britain is the downgrade in the forecast of the GDP of the UK. I believe a couple of weeks ago, they predicted that the UK's GDP will fall between 9.6 and 9.8%. They've now upgraded that to 10.4%. They've also lowered their expectations for our recovery next year. I believe they've dropped that from 5.8% to about 5.6%. Even though, of course, these percentage points are just small, that is billions and billions of pounds. And I think, though, the IMF's forecast is quite in line with what we've heard from PwC, from the Bank of England, from S&P Global. They all predict that really this year about 10% to an 11% is what the British economy will contract. But, of course, as well, we've got Brexit staring down our face. We've got a US election coming up next week. Is there going to be a deal? Is there not going to be a deal? There are some suggestions, and we actually speak about that in Channel's Business Global, which will be airing later today, about how who runs the White House will determine a lot about how Boris Johnson could potentially go into the last remaining negotiations with the EU. If Trump is re-elected, then perhaps because he's very chummy with Boris Johnson, he may not be so willing to secure a deal with the EU. But if we see a Biden presidency, and Joe Biden has been pretty clear about siding with Ireland, siding with Europe, then perhaps there will be a deal. So there are so many different contexts to how Britain's GDP will fare for the end of the year. But there's still all to play for. 2020 has been anything but predictable.
A lot to watch out for. Anyway, in the corporate world, Pizza Express is to ask a further 1,300 jobs on a new round of cost cutting. This announcement is coming just before the government's job retention scheme comes to an end tomorrow. What does that tell us about the implications of the government ending the furlough scheme? You talked about the unemployment rate.
Well, it doesn't tell us anything that we don't already know. That furlough has been helping so many jobs, but I don't think, there's a difference between the furlough scheme and COVID-19. COVID-19 is what has completely crippled the industry. The furlough scheme has saved jobs. The furlough scheme hasn't taken away jobs. So when it pertains to Pizza Express, that's really because of COVID and the new restrictions, the rule of six, the fact that people are working from home. There is so many different local restrictions that they're finding it impossible to survive. And this new job cuts, which they've just announced now, this is in addition to the 1,100 jobs that they said they were going to get rid of in the summer. A lot of these hospitality industries, they have been surviving potentially because of what happened in August with the Eat Out to Help Out, and you saw a lot of people flocking out. Monday, Tuesday, Wednesday became the new weekend here in Britain, and they did hope that they would survive. But now that there are these localised restrictions, now we're heading potentially into a second lockdown. Pizza Express are just one of a few that are saying they cannot keep this amount of staff on. So it's another sad day for the labour market.
All right, Jelena, we'll come back to you later in the day for more update. And back here at the debt and currency market, back to you, Eddie.
Thank you, Chimi. Bankole Odusanya, the head of fixed income at UBA, will be joining us for this segment. Good morning, Bankole. Thank you for joining us on the program.
Good morning.
So there was a PMA auction, there was a primary market auction on Wednesday, and we know that stop rate had dipped below 1% across all tenors. What was subscription like?
The subscription for the 1 year in particular was up to 600 billion. As we speak, system liquidity of uninvested funds is about 790 billion at our close of business yesterday. The reason is simply because we are having excess funds mature from OMO and Nigerian Treasury bills maturities. When these funds come in, what's happening is that the government and the central bank are not issuing as much as the securities that are maturing. For instance, this week, 336 billion OMO bills matured on Tuesday. Today, we expect that the central bank will issue an OMO bill, but not up to or not more than 100 billion. The gap of 260, 236 will then be excess funds chasing after alternative source of investment like commercial papers, corporate bonds. We are beginning to see a lot of push and drive and demand at the equity space. Most of these funds are funds that matured from fixed income security assets that are now being rechanneled, invested into other sources and alternative sources of investment.
All right, Bankole, thank you for your input on the program. Do enjoy the rest of your day. Bankole Odusanya is the head of fixed income at UBA. Well, we have to leave in now. Over to you, Chimi.
Well, on that note, we draw the curtain on today's edition of the program and, of course, for the week. And we, of course, will be bringing you update from that panel sitting at the Lagos Arbitration Center in Lekki. I'm Chimeze Obi Iwago.